You know that super popular fund SCHD? Well, there's a really good chance you and pretty much everyone else are thinking about it all wrong. And look, this isn't just some fun fact. Misunderstanding this one fund could be quietly knocking your entire investment strategy out of whack. So let's get into what's really going on. Right? If this fund could actually talk, this is exactly what it would be shouting from the rooftops. You've got half the internet calling it a simple value fund, and the other half calling it this boring, stodgy dividend play. But the truth, it's a completely different animal, and honestly, a way more interesting one. So here's the bottom line, and this is the part that really matters. You think you're buying a classic, maybe even boring, value fund to balance out all your growth stocks. But what you're actually buying is this super sophisticated machine that hunts down high-quality companies that also have strong upward momentum. And that, well, that changes everything about how you should be using it. Okay, so how did this happen? How did one of the most popular ETFs on the planet get so misunderstood? Why is everyone slapping the wrong label on it? Let's dig into where this whole myth came from.
It really boils down to three simple things. First off, our brains just have this built-in shortcut. We hear dividends, we think value. It's almost automatic. Second, way back when the fund launched after 2011, yeah, its portfolio did look a bit more like a classic value fund. And finally, let's be real, it's just way easier to say value fund than, a high-quality, cash flow compounding factor-based product.
All right, enough about the myth. Let's get to the reality. It's time to pop the hood on SCHD and see what this thing's engine is actually made of. Because once you see it, you'll get why it's so different from what you thought. So the very first thing SCHD does is run this incredibly tough, ruthless quality check. Before it even thinks about a company's dividend, it's looking for the financial elite. We're talking high return on equity, which is just a fancy way of saying the company is great at making profits, plus tons of cash flow and a rock-solid balance sheet. Basically, it filters for strength and durability above everything else. But see that intense quality screen? That's really only half the story. There's a second, kind of hidden engine working here that most people completely miss, and this is the real secret to the fund's performance. And here it is. This is the secret sauce. The way the fund is built, the way it ranks and rebalances its stocks, it inherently rewards companies that are already doing well, companies that are on a roll with strong, persistent uptrends. It's not called a momentum fund, but its system creates this powerful momentum tilt. It's designed to let its winners run. And look, this chart just lays it all out there, plain and simple. When you actually break down the fund's DNA, quality is the king, making up half of it. Momentum is right behind with a huge 30% slice. And value, the thing everyone calls it, it's a tiny 5%, barely even there. This isn't a value fund. It's a quality momentum fund that just so happens to pay a nice dividend. So what's the upshot of all this? What's the practical result of this unique system? Well, it means SCHD is one of the best machines out there for avoiding what investors fear most, the dreaded value trap. Let's see how it works. Over on the left, you see the kind of companies that often end up in traditional value funds, right? Businesses with falling profits, ugly balance sheets, maybe they're in a dying industry. But on the right, that's the stuff SCHD's quality screen is built to just obliterate. It systematically weeds out the exact things that make a value trap a trap. I absolutely love this analogy because it just hits the nail on the head. Traditional value investing can feel like buying a bunch of broken toys and just hoping you can fix them. SCHD, on the other hand, is all about buying the awesome, high-quality toys that were never broken in the first place. Okay, we've established it. It's not a value fund. So what? Why does this actually matter to you and your money? Well, because this isn't just about labels. Misunderstanding this fund leads to some pretty big mistakes when you're building your portfolio. So the first big problem is that you've got a blind spot in your strategy. If you bought SCHD thinking, great, this covers my value allocation, you're not actually getting what you paid for. If you were hoping to get exposure to those deep, cheap, cyclical companies that pop during an economic recovery, well, this fund is built to avoid them. So you could have a major hole in your strategy and not even know it. And that leads us straight into the second critical mistake. So many people do this. They'll buy SCHD and pair it with a growth fund like QQQ, and they think they've built this perfectly balanced barbell, value on one side, growth on the other. But remember,
SCHD is really a quality momentum strategy. So you're not creating balance. You're actually, kind of accidentally, doubling down on very similar investment styles.
And finally, the third problem is all about your expectations.
Because it's not a value fund, it's going to behave differently than you might expect. SCHD really thrives when high-quality, profitable companies are leading the market. But it can totally lag when a bunch of speculative, junky stocks are rallying, or when deep value makes a massive comeback. If you think it's a value fund, its performance is going to constantly confuse you.
So if value fund is just the wrong label, then what's the right one? Let's give SCHD the identity that it has truly earned.
Well, if you want to be technically accurate, you'd call it a quality dividend momentum ETF. If you want something that sounds a bit cooler, blue chip cash flow compounder works great. But honestly, my personal favorite has to be the most direct one, the fund that filters out the trash.
But if you really want to capture its whole essence in one sentence, this right here nails it. This is not your grandfather's old school value fund. It's a sophisticated, modern machine that blends quality, momentum, and dividends into one really powerful package. And really, that's the big takeaway here. Understanding what's truly under the hood of a fund like SCHD is a huge lesson. It forces us to ask a much bigger, more important question. What other labels have we just been taking for granted? Now that you know the real story here, what other misunderstandings might be lurking in the rest of your portfolio?